Hey guys, how's it going? It's Andy from Magoo Investing. Happy Tuesday. So for the past two videos, I've been talking about a list that I found from Bank of America where they talked about their 11 favorite stocks to buy going into 2021 from each of the 11 stock market sectors. And so I went through and I talked about all of those 11 stocks, but I did find an article a couple days ago talking about how all 11 of their picks from 2019 for going into 2020 all were underperforming compared to the overall sector that they were a part of. So maybe Bank of America doesn't exactly know what they're talking about, and maybe someone like myself, a well-informed 23-year-old, can pick better stocks for 2021. So I went through all 11 of their stocks. I gave my analysis, and if you missed those videos, I'll link that above right now. But today I'm going to be doing my picks for my favorite stocks to buy from all 11 stock market sectors going into 2021. I'm going to be breaking this down into two different videos, and today I'm going to be talking about the first 5 stocks from 5 different sectors of the overall stock market. And just a reminder, I do have timestamps if you'd like to jump around, but I'm going to organize this video a little differently because I want to keep people engaged with it as much as possible. I've been seeing the drop in the time watched, so I'm going to try to give a TLDR for each of these stocks on this list and give 3 or 4 big takeaways for why I'm very bullish on these stocks, because I think it's better to have small talking points and know everything about a single company. I want to talk about the biggest things that I like about this company and why I feel confident buying them going into 2021. I do want to disclose that I do not own any of these stocks at this point, but these are 11 stocks when you combine these two videos that I'm likely going to be buying 5 or 6 of them going into 2021. I'm just going to be waiting until the new year. Hopefully the stock market falls and I can get these ones at a discount. So before getting started, I do have to say that I'm not a licensed financial advisor and this is not financial advice. Anything you hear in this video is just me giving my own opinions on the stock market, and you need to do your own research before making any investment decisions. Also, if you've been enjoying these videos, I really appreciate it with that like and subscribe button, as would help my channel out a lot. With that out of the way, let's talk about the first sector, which is communication services. Bank of America picked Disney, ticker symbol DIS, and I gave that a big thumbs up. So when I give it a thumbs up, I'm happy to buy that. I could put a company like Disney on this list, but I decided to talk about Netflix, ticker symbol NFLX. Currently, Netflix is trading for $522, and it's up 61% on the year. So the first main thing that I like about Netflix has to do with them raising prices. When you look at a company that focuses on a subscription model, there's 2 main ways that I can think of to increase the amount of revenue that you're going to be bringing in. The first one is you can just increase the number of people that are subscribing to your platform. And Netflix has seen some incredible growth over the past couple years. I saw some crazy numbers that 85% of people that subscribe to a streaming service already subscribe to Netflix. So their penetration in the streaming market is absolutely massive. And they've seen explosive growth internationally, as you can see from this graphic. And so that's one way to increase your revenue, is to increase the amount of subscribers that you have. And then the other way, in my opinion, is to increase your prices. And so Netflix has started to do that. They announced that they're going to be raising the prices for their basic and their premium plans. And as a result, that's expected to bring in an additional $500 million in revenue in 2021. And so it may only be like a $1 or $2 increase depending on which plan you have. But when you put that together with the hundreds of millions of people that are subscribed to the platform, it adds up over time. And so this is a huge increase to their revenue, and I love this for the company, considering, number 2, they're spending a lot more on their own original content than they have ever before. And so one of my only complaints that I've ever had with Netflix for the past couple years is that I thought that they spent way too much money to have the rights to stream certain shows that weren't their own. Some of the famous examples I can think of this is when they spent $100 million to keep Friends on the platform. And then there were some rumors, I couldn't find the actual numbers, from some very similar numbers around the $100 million range to keep Friends on the service, which is no longer there. But they've been switching to investing in themselves, which is always something that I like to see with a company. I always talk about when you have a company that brings in free cash flow, there's a couple things that you can do with it. You can invest in yourself with R&D, and for a streaming platform like Netflix, R&D is investing in their own shows and infrastructure, which is fantastic. They can pay out a dividend, which tech companies like Netflix don't normally do, or you can hold on to it in cash. And so Netflix has the cash to back up the stability that they've brought in, and they've been spending aggressively on their own things. Before the pandemic started, they were expected to spend $17 billion in content in 2020. And so I absolutely love this. It'll mean that their recurring payments to these other streaming platforms are going to decrease over time. And then eventually, depending on how much they're going to be spending in the future, they're going to have a massive catalog of their own content. They're not going to have to pay out rights to it to stream it every year. So I think this is fantastic for the company. And then the number 3 reason why I love Netflix has to do with their track record. Netflix is a massive brand name. When you think of streaming, you think of Netflix. The main competitors with Disney and Disney Plus are trying to compete with Netflix because they are the top dog in this sector. The average user that I could find has 2 hours of watch time per day. So this is a platform that people love. As I mentioned, 85% of people that own a streaming service use Netflix, and they're using it a lot. Here's a revenue chart from the past decade plus, and it's absolutely ridiculous. It makes me feel very confident on them spending so much money on content because they've been able to increase their revenue over time just consistently, and that does not worry me at all. So Netflix is also the best performing stock of the 2010s with returns over 4,000%. So when you put together those three factors of them raising their prices, which is expected to bring in an initial $500 million in revenue in 2021, they're going to be spending on their own content with $17 billion in expected spending for their content in 2020. And then there's track record of being the best performing stock of the 2010s. Makes me feel like Netflix is a buy pretty much at any time going forward. So I absolutely love Netflix. Next, we're going to be talking about consumer discretionary, where Bank of America picked Hilton. Consumer discretionary is a sector that pretty much encompasses anything that you can pretty much think of. It's just non-essential products or services. And so Bank of America picked Hilton, which I gave a big thumbs down for because I thought investing in a hotel company during a pandemic and during a likely recession was not a great idea. And the two companies I thought about adding onto this list, I thought about talking about Peloton, ticker symbol PTON, which has had an incredible 2020, but I've talked about it kind of recently, and I will mention it as being a potential substitute for the stock I am actually going to talk about, which is Lululemon, ticker symbol LULU. Lulu is trading for $360, and it's up 55% on the year. And so I decided to pick Lulu over Peloton just because I think it has more growth potential than Peloton, because Peloton has had an incredible 2020, and the numbers that they've had have been fantastic. They had a huge boost in their stock price when they're up 15% after a major acquisition that's going to help with some of their delivery problems that they've been seeing. But I think Lulu has fantastic upside. And so the first reason why I love Lulu is just the strength of their overall brand. When I think of strong brand loyalty, I think about stuff like Nike and Lululemon, which are just, their identity is so tied in with high quality, and it seems to have a cult following. And when you're buying into a retail stock, I've loved to see that. And you can really see that cult-like following shown when you see the online sales during the actual pandemic. When you have a lot of these physical retailers that have been shut down, you kind of expect them to have a pretty significant drop in revenue because their stores are not open. But when people are showing that they're willing to go online and pay for their products still, it shows that their products are such high quality and people absolutely love the brand. And that makes me feel very confident about them going forward. Also, in their last earnings report, as I mentioned, they saw increases in both their online and their same-store sales. So they've seen incredible growth. They've also put a 5-year growth plan out, which focuses on doubling its men's products revenue by 2023, and it expects to quadruple international sales in the next 5 years. So this is a company that has a very strong brand already, and they're trying to expand that further to the international markets. As we know, anytime you can get exposure to the international markets, that's such a wide market and has such crazy potential to increase your revenue over time, and the fact that they expect to quadruple their international sales in the next 5 years is very impressive. Number two thing that I love about Lululemon has to do with their Mirror acquisition from this past summer. For those of you that don't know, Lulu acquired the fitness startup company Mirror for $500 million. And so Mirror is one of these kind of tech gadgets similar to Peloton, which is the whole reason why I decided to kind of put these two together, because I think you could substitute the two of them in. We've seen the success that Peloton has had this year, and for a company like Lulu that has such a strong brand identity, I thought it was genius to try to integrate these two products. You have the sportswear and the leisure wear with the Lulu brand, and then you're bringing in this tech startup that people will be excited about and will be able to be sold in the Lulu stores. And so I thought that was very attractive. I've been very impressed about the expected revenue numbers that we're going to be able to see in 2020, where they're expected to bring in $100 million a year in revenue, which was the first estimate when the company was acquired in July. Now their CEO says that that number is going to be likely closer to $150 million. So with the pandemic, with the lockdowns, I think the stay-at-home fitness trend is not going to be going away anytime soon. We've seen companies like Apple get on board with that recently, and I think it legitimizes this business. So I absolutely love Lulu because of this Mirror acquisition. And then number three reason why I love Lulu has to do with their track record with revenue. Lulu's had some impressive growth in the past, and I don't expect it to stop anytime soon. As I mentioned, they expect to double their men's revenue in the next couple years and quadruple international revenue in the next 5 years. And when I put up their revenue chart, it's just so stable and makes me feel so great about the company. It makes me feel confident in them being able to reach their high expectations that they've set for this revenue growth. So overall, the three reasons that I love Lululemon for a long-term investment: number one comes from the strength of the brand that I can compare to the strength that we see with Nike. Number two, with the Mirror acquisition that I think will put them kind of in the same market as Peloton, and we've seen the impressive growth that they've seen with those high-quality stay-at-home fitness products in 2020. And then number 3, the track record with revenue and their explosive growth that they expect to see in the next 5 years. So number 3, we're going to be talking about consumer staple products. Bank of America picked Walmart, which I gave a thumbs up. It's hard to argue with a company like Walmart, but I decided to go with Beyond Meat, ticker symbol BYND. Beyond Meat is currently trading for $138, and it's up 82% on the year. So number 1 reason why I love Beyond Meat is that this is the leader in a very fast expanding sector. This is an innovative market that I'm really excited about, as the plant-based meat products have just kind of exploded in the past 2 years. As of right now, this is a decently expensive product, but all the articles that I could read about these products shows that this is going to be an economy of scale. The larger it gets, the costs are going to go down significantly. And since they've been spending so much money on research and development, it's likely going to result in these products being cheaper than traditional meat products, which will be a huge benefit for the sector. People are kind of skeptical about the plant-based meat products, but if it's going to be cheaper than the actual meat products, I think that'll incentivize a lot of people to actually try the products. I've tried it a couple times. I got the Impossible Whopper from Burger King one time just to kind of try it out, and I was very impressed. And I think this market is going to only expand over time. Also, the numbers that I've been seeing, it's expected to have significantly higher gross margins than traditional meat producers by like 40% compared to like 15%. So this is going to be a very profitable market. And as of right now, they are the only publicly traded plant-based meat product until Impossible is likely going to be going IPO in 2021. The second reason why I like Beyond Meat is that they've succeeded in 2020, even though they've had huge problems with some of the places that they're going to be supplying with products, especially with the lockdowns affecting restaurants. So the company has had an impressive 2020, even though they've had problems with the restaurant industry. Many of the sit-down restaurants that they were trying to sell to were shut down. But even with that, they've made impressive deals with companies like McDonald's, Starbucks, and Yum Brands to improve their business. Even with those problems, the company is expected to keep up the rapid increases in revenue that we see with the annual increases in revenue from this graphic right here. And so even though we've had some problems in 2020 with that, they've been on an explosive growth pace for their overall revenue, and I don't see that stopping anytime soon. Also, McDonald's announced their McPlant product, and the hope is that Beyond Meat is going to be getting that contract. They got the contract for Canada, but it has not been announced who is going to be supplying the products for the US-based actual product of it. So that's going to be a huge deal, and if Beyond Meat can get it, it's expected to be worth around $300 million in annual revenue. And for a company like Beyond Meat that has an expected annual revenue in 2020, $400 million, this would be a huge boost to them overall. So that's the number 2 reason. Number 3 has to do with the climate impact. I am a biologist. I have 2 degrees when it comes to biology and wildlife, and I care a lot about climate change and the environment. And being able to buy into an industry that's innovating rapidly and still has a positive impact on the overall environment, I think is a huge plus for someone like me. 9% of all carbon emissions come from cows and livestock, and being able to limit that gets the planet closer to the emission goals that a lot of these countries have set to hopefully reach by 2035 or 2050. So I love being able to buy into a company that has kind of aligned itself with the same morals that I have. And this is an industry that's only going to increase in size over time. So just to summarize the 3 reasons why I love Beyond Meat. Number 1 is that they're the leader and the only publicly traded stock in this expanding sector. Number 2, they've succeeded in 2020, even though they've had tough times with the lockdowns affecting restaurants. And number 3, it has a positive impact on the overall climate and reducing carbon emissions overall. Number 3, if we're going to be talking about energy, Bank of America picked Chevron, ticker symbol CVX. And I gave that a thumbs down. I'm going to be talking about Brookfield Renewable Partners, which is ticker symbol BEP. I could put something like a Plug Power in here. I didn't feel I was confident putting Plug Power in there because it has had such an impressive growth in 2020. I wanted to pick something that has a longer track record of success, and that's why I wanted to put BEP on this list. But I do absolutely love Plug Power. I get asked about it all the time. So from my green energy stocks, this was one of the top stocks I had on that list because they are one of the leaders in this sector. They have been very successful with hydro and wind power in the past, and they currently produce 19 gigawatts from hydro and wind right now. And that is a 6-fold increase since 2015, so they have had rapid growth with that. They're also now starting to expand to solar, as they're expected to have 18 gigawatts of production expected very soon. This expansion comes after a $810 million deal with Exelon to buy their overall solar business. They have huge hydro facilities with 219 total facilities across 82 river systems. So this is a very large company when it comes to green energy. They've been very good at what they do with hydro and wind. Now they're trying to expand into solar. So they have a very diversified portfolio when it comes to the type of energy that they're bringing in. I haven't seen much about them going into hydrogen yet, but I expect them to try to do that in the near future. So absolutely love it. Number one reason why I like the stock is that they're a green energy leader. Number two is that they've had incredible returns. Since 2000, they've had annualized returns at 18%, which is not something you can say about pretty much any other energy stocks in the past 20 years. And especially with a company that focuses on green energy, this is very impressive. It's hard to find energy stocks that have had returned 18% over pretty much any given time, and it's hard to find any of them that have done it over the past 20 years. So that's very impressive. This gives me a lot of faith for a long-term investment because they've survived many political administrations, various recessions, and changing views on how energy should be run. In addition, they have a 3.3% dividend that has never fallen below 3%, which is an extra incentive to bring in additional cash flow to your portfolio. And the final reason why I love BEP has to do with their international exposure. The company has spread its wings recently and is now more of an international company that was 5 years ago. 5 years ago, 50% of their energy production came from the United States and North America, and now it's only 25%. And so what this does is it gives them the opportunity to find the cheapest energy options out there and allows them to reach different markets that they wouldn't have been able to if they only focused on the US market. And so I think that's very attractive for the overall growth of the company. And so just to summarize, the reason why I like Brookfield Renewable Partners, ticker symbol BEP, number one comes from them being a green energy leader. Two of them having annualized returns of 18% since 2000. And number three is that their overall international exposure has increased over the past couple years. And so the final stock I'm going to be talking about on this list is from the financial sector. Bank of America picked Allstate, ticker symbol ALL. I could pick something like a Square or a PayPal because I think they are fantastic options, but I wanted to go with a discount approach. Square and PayPal are both up like 100% on the year. Square is up above 200%, I believe. And I wanted to go with something that has the potential to have a fantastic recovery going into 2021. And so I'm going to be talking about my favorite bank stock overall. If you've been on the channel for the past like 4 months, you know that's JP Morgan Chase, ticker symbol JPM. So currently JPM is trading for $122 and it's down 12% on the year. And so one of the main reasons why I like JPM, which is what I've already mentioned, is that it is at a significant discount. It has been at a bigger discount when I talked about it back in like August. But this is an industry that was beaten down in 2020, and I think it's poised to recover very well going into 2021. Recently, the bank stocks jumped after the Federal Reserve allowed them to start doing their stock buyback programs again after they passed their stress test that goes through the Federal Reserve. And so stock buybacks, if people don't know, basically the idea is that you bring in free cash flow. I mentioned the things that you can do with the cash earlier in this video, but one of the things is that you can buy back your individual shares. And so what that does is it removes some of the shares from the overall pool. And what that does is it increases the value of all the remaining shares because there are less shares and the value stays the same. So the price of each of the shares goes up. And so this is usually seen as a very positive thing for investors, which is very different than what we've been seeing with a lot of the EV stocks recently that are trying to capitalize on the fantastic 2020s that they've had by having stock offerings, which dilutes the value of each of these shares, but brings in a lot of money for the company. So that was the reason why we've seen some very nice boosts with these companies. But I was really never worried about JP Morgan failing any of the stress tests. Over the summer, Wells Fargo, ticker symbol WFC, was the only bank stock that failed the stress test. And as a result, they were required to lower their overall dividend, which is never seen as a positive thing. The stock's revenue is the most attractive out of the bank stocks, and I love it as a recovery play. Number two reason why I like JP Morgan has to do with their trading history boosting the stock. And so during the pandemic, a lot of the bank stocks were getting absolutely killed. But when you looked at JP Morgan, throughout all of the earnings reports from this year, you've seen, oh, they've been taking in this much money and lost provisions to try to protect themselves. Oh, and their trading part of their business has been doing incredibly well. And so this is a type of business that they've excelled in 2020 that a lot of the other bank stocks don't have a part of, or at least it's not a significant revenue producer like it is with JP Morgan. That's the story from all the earnings reports of 2020, is that their trading part of their business and their investment bank has been fantastic. And so this makes me feel very confident in them because even though things were really tough in 2020, I was never really feeling panicked about JP Morgan. And so what this has shown me is that JP Morgan is the best bank in my opinion and makes me feel very confident no matter what the economic times are. And so I am going to only put two positives for JP Morgan. Number one, considering it is at a discount when all the other stocks on this list were up at least like 50%. And then number two, I think the trading history from their investment bank is very attractive. That gives them a lot of stability no matter what the economic conditions are. So let me know what you thought of my list of the best stocks to buy for 2021. As I mentioned, I don't own any of these stocks at this point, but they are ones that I'm likely going to buy like 3 or 4 of them at some point in the next year. It just really depends on how the market moves overall. So let me know what you thought of my list. Let me know what stocks you guys are buying going into 2021. Thanks for all the support, and I will see you in the next video.